Thanks for keeping it tuned to Smooth 98.1. Love music, love life. It's 32 minutes past 6 a.m. It's a Monday morning, 10th day in the month of March 2025. Ayokunmi Kekiria, I'm right here with you, ready to walk you through some business related matters because this is a Business Express. And I won't be having this conversation alone this morning. I'll be discussing the impact of low oil prices on Nigeria's economy. Yes, that is something that has been making the rounds, and we need to have that conversation. Joining me this morning to take a look at this and try to break it down and make some sense of it for us. David Gwatau is joining me. He is an investment research analyst at ARM. Very good morning to you, David. Great to have you on the show.
Good morning, Ayo. Thank you. Thanks for having me. Uh,
Abs- Absolute pleasure. Absolute pleasure. And, it's an early start, but hey, we need to have these conversations. And what better person to join me on this one than David? So, right into the heart of the matter. We had oil prices fall below $70 a barrel on Friday. I mean, what are the implications for Nigeria, whose 2025 budget oil benchmark is pegged at $75? What does that mean for us?
okay. Thank you for that question. I think it's quite an interesting one, right? Um, with the government's budget, projected for the budget, right? The government projected $75 per barrel. Well,
Right.
in my view, I believe that the government had expected lower crude oil prices for 2025, compared to 2024, projecting 75 uh, 75 US dollars per barrel compared to 77.96 US dollars per barrel. So they must have obviously seen this coming that oil prices will definitely be lower in 2025. However, I don't think they had anticipated that it would, have happened this rapidly and so early in the year. But just to answer your question, I mean, of course, with oil revenues still accounting for a majority of Nigeria's revenue and over 80% of FX inflows. Um, you know, well, if crude oil prices continue on this trajectory, we could potentially see, budget deficits, a widening of the budget deficits, which might, push the governments to borrow, to increase borrowings. And
Mm.
of course, that would be negative to the debt to GDP ratio. Of course, it's also going to impact the amount of effects that we should be expecting from oil trade, oil exports. So yeah, those are my few points.
Okay, interesting thoughts there. Now that being said, looking at how things have panned out, pegging at a particular amount, but the reality being completely different. Do you think that we're going to keep the oil benchmark at that price, or we're going to be forced to make some changes?
So yeah, I think there's room for some sort of adjustments to the government projections. Historically, we've actually seen the Senate revise crude oil benchmark projections just to align with current realities. I mean, of course, some information that has not or was not available when these projections were being made initially. However, the signals we are getting from global crude oil prices just indicates that prices might tend to go lower, I mean, talking about President Trump's tariffs,
Mm.
and his pro fossil fuel mandates, drill baby drill, talking about ramping up oil production with the geopolitical, we've seen major strides made with the geopolitical tensions, reaching ceasefire in Gaza and, in Ukraine and Russia about to quell the whole conflict. So yeah, we might see global supply ramping up significantly, which would be a downside for oil prices.
Mm. If we decide to open up a folder on Donald Trump, we probably will not leave the studio
Sorry, I think I lost
anytime
you. I can't
soon.
hear you anymore.
I said, if we decide to open up a folder on Donald Trump, we probably will not leave the studio this morning. And as you mentioned, he's keen on lower oil prices. The Saudis are really not happy about that. They are not happy at all about that sort of a situation. Is this something sustainable, and what would be the long-term impact, around the globe if this is something that is maintained?
Okay, so let me just speak to what Trump is trying to achieve first. So I think you see, I think Trump is apart from trying to achieve a stronger U.S. economy, of course. I mean, we've seen a situation where energy prices across the globe have been quite elevated. I mean, energy prices as it translates to the final consumers, right? So I believe, of course, if you see lower crude oil prices, that means the cost of raw materials for the refineries is low, and therefore the final costs to the consumers would also be lower. However, on the global scale, especially for countries that depend on crude oil for revenue and FX needs, right? It will affect them negatively. So we
Mm,
could, I mean, of course, like for example, for a country like Nigeria, increased debts, low FX turnovers and all
right.
of that. So it could be, I mean, for countries that are dependent on oil and gas, I mean, it could actually affect the economy negatively.
We're going to touch on that in a little bit, but for you out there listening to us this morning, you can join the conversation, share your thoughts, any questions you might have, or any observations or perspectives. You can send your messages in on WhatsApp on 0809 0809 That is the WhatsApp number. We're also on YouTube. We're streaming live, so you can join us at Smooth 981 FM Lagos. Smooth 981 FM Lagos. You can leave a comment in the chat box as well. We always love to hear from you. All right, so keeping the conversation going, let's talk about OPEC Plus here, David, because from what I understand, they might add more barrels to the market next month. Now, won't doing that be them shooting themselves in the foot, or am I getting things wrong here?
No, I mean, yeah, it might seem like that, right? Yeah, I agree. But just to give some context around this, right? Um, in April of 2023, right?
Right.
A group of eight OPEC plus countries, agreed to embark on a 2.2 million barrel per day production cuts. Right, it was completely voluntarily. It was not something that the OPEC had mandated. Right, it was on
Okay.
voluntary move on parts of these countries. Um, it was initially meant to last till the end of December 2023. However, they kept on to postpone this, the production increases, and I think they postponed about twice to December 2024, and then also to, I mean, current period, about April, and late March to early April. Now they're talking about starting to increase production in April. I
Mm,
believe that generally this just shows that they are not fixated. They're basically not fixated on and are flexible, towards the direction of global oil price fundamentals. So they are basically making their decisions based on what the market is doing. So I think based on what was released by OPEC, they had they had emphasized the fact that the decision to increase oil production will gradually they will continue to look at the fundamentals, global market fundamentals, to decide if, and it could, I mean, there could be a reversal. If they start to increase production, there could be a reversal or even a pause,
mm,
right? Depending on what the market is saying. So it's not done blindly, and it's not an outright commitment to increase or ramp up oil production. And
okay.
however, that's of course look at the what these countries might be giving off, right? If they say, because they've taken these voluntary cuts, that means they are losing some sort of revenue. They're losing revenue from that would otherwise gotten if they had produced and sold this barrels of oil in global markets. So yeah,
Right,
just
right.
thinking about it like that.
Okay, interesting thoughts there. Now, earlier on, you had mentioned, the effects that this would have on countries who are very, very dependent on the oil and gas sector. And I said we should put a pin in that one. Now, let's bring it home to Nigeria. And I need your perspective here. Can Nigeria's non-oil sector ever step up when it comes to dollar earnings? I mean, that's a huge elephant in the room. I just had to ask that question.
Well, I'd say yeah. I mean, we have potential. I mean, as Nigerians, I think Nigeria.
Potential.
Well, but I think the only way that would be possible is if we could increase domestic manufacturing and of course also improve services, especially when it comes to exports, because we already have service. Our services sector in Nigeria is what's driving GDP for now, but then we need to be able to export more services and more products. So generally, we just need to make exports from Nigeria more attractive on a global scale, and more attractive, more competitive on a global scale. So yeah, I mean, and of course, it's not going to be an easy thing. Talk about the structural issues that continue to impede the economy. Talk about our FX needs, cost of production for and also infrastructural developments. I mean, all of that still remain downsides. So that we're seeing.
Right. The potential is there, but so many hiccups and kinks along the way. Can we iron them out and achieve said potential? I don't know. Your guess is actually as good as mine. All right, David, just to wrap up the conversation this morning, real quick, what's your outlook for the oil sector in 2025 as we get along?
Well, from where we are at right now, it looks compared to 2023, we should expect lower oil prices. My projection is at $73 per barrel, right? By the end,
Okay.
crude oil production for 2025. I'm sorry, crude oil prices. My bad, for 2025. Uh, so basically, what will be driving this, driving the market will basically be, of course, the Trump tariffs,
Mm,
Trump mandates to increase oil production. Now we've seen OPEC come, OPEC plus those 8 countries trying to ramp up production again, starting from April, which would increase supply in the market. We've seen geopolitical tensions, trying kind of cooling off. So all of this are just points towards increased production. We've also seen on the demand side, right? There's stronger economic growth, so that could increase oil demand, right? There's increased
okay.
growth. I'm talking about in Europe and in the USA. We might see slower demand, slower demand for crude oil products in Asia. I mean, on the back of Trump tariffs. I mean, and the reciprocal effects coming from the other countries. So yeah, overall, we expect oil prices to trend downwards from 2024, sorry. And we project oil prices to close at an average of 73 barrels, 73 US
Dollars.
barrel.
Dollars per barrel. All
Exactly.
right. We got there in the end. Thank you so much for joining me this morning. I've been speaking with David Gwatau. He's an investment research analyst at ARM. It's been a pleasure having you on Business Express this morning.
Nice to be here.
All right. Have yourself a great Monday and a great rest of the week as well. And thank you for keeping it tuned to Smooth 98.1 and the Smooth Breakfast as well, which continues. There's more great music coming your way as we journey along to 7:30 when we take a look at the papers on Freshly Pressed. All right.